This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt and Hammond on the show to talk some IPOs. Jake Wujastyk from Trend Spider. We have a
breaking news. What is up, everybody? It is Monday. Welcome back to another episode of Benzinga Live. Hope everybody had a great holiday weekend. We'll get to that in the chat. I have some questions about your Thanksgiving, aside from just what your favorite food was, what your favorite side was. We'll get into that in a little bit. Just wanted to start the show off, of course, with the biggest headline of the day so far is that Twitter CEO Jack Dorsey is stepping down. We can see how the stock is reacting. Let me see real quick. So we went up initially off the news. First of all, let me go on a shorter time frame so we can see really what's been going on intraday. So we opened about 9% higher this morning, Twitter did. And then we had a little sell off, and then we spiked back up about 5% and now selling off again. So it looks like investors are a little unsure of what they think about, what this means for the company going forward. I think it could be bullish long term because Twitter, of course, for the past 10 years or so has had one of the biggest user bases out of all the social media platforms. Of course, Facebook was the biggest about 10 years ago. And then Twitter, has been growing, but the stock hasn't really done much, right? If we go look at, say, I don't know, a weekly chart, we can see that, going back to 2015, April 2015, the stock was at $52. Now it's at $46. Of course, we did have this big run up all the way to 80, but that was aided a lot by the COVID-19 pandemic when people didn't really have a lot going on. They didn't have anything to do but to be on Twitter. So, for how popular Twitter is as an app and a social service and how really important Twitter is to the way that we consume media, whether it's news, political opinions, whatever it is, Twitter has ingrained itself to become essentially part of the public discourse in the United States. And so for the stock to be such a, kind of laggard compared to other competitors in the industry, whether you're looking at Facebook, Snapchat is kind of like Twitter, where Snapchat really hasn't done that well. So there are a few social media stocks, I guess, that are like Twitter that really haven't done that well. But maybe for investors that have been holding on to Twitter for a long time, this is the sign that, hey, look, things are going to change. Maybe there's a little bit more pain in the beginning while they're figuring this out. But in the long run, maybe this is bullish for Twitter. I don't know. I hold a couple shares of Twitter, full disclosure. But that's my thesis on it, is just that I don't think the users are going anywhere on Twitter. And I think eventually the company will figure out, okay, how can we monetize this better than we have been? How can we make more money off of our ridiculous monthly average users? And kind of the same thing with Snapchat. I have pretty much the same thesis there with Snapchat, that eventually, right, the money will start going in. Right now, they have the market share, they have the users, they need the money, they need the revenue. Other headlines, I've been watching NVDA today. If you watch this show, this is one of my favorite stocks. Again, disclosure, I do hold this stock. NVIDIA breaking out up more than 4% on the day. The stock got hit last Friday when the markets opened after Thanksgiving, of course, with the Omicron fears for this new COVID variant. But so essentially a timeline. Here's what you need to know about Omicron and the markets is the timeline is last week, kind of right around Thanksgiving, maybe the day before on Wednesday is when the first headlines really started sweeping around the world about this. Not originated in South Africa, but that's where it was found. That's where it was discovered by scientists. And the markets reacted on Friday pretty, adversely. Like the markets had one of their worst days in over a year. People were scared about this new variant. And then over the weekend, what happened, as what often does, is people realize, okay, maybe we overreacted a little bit. Some of the data coming out about this variant is that it might not be quite as dangerous as some initially reported. It might spread faster, but then the symptoms aren't as severe as once thought. So a lot of these growth stocks that got hit on Friday are coming back today. Some of the companies that are still down today off this new variant are the airlines. So if you look at American Airlines, if you look at Southwest, right? Because these are the companies that are going to get hit the most if travel is hit even a little bit by this variant, right? Even if we're talking about, okay, this sets back the full recovery that we've all been waiting for by, I don't know, 2 months, 3 months, even if it's not that big of an overall impact, it will be for the airlines. I don't know though. I flew back and forth from Detroit and St. Louis for Thanksgiving, and the airports were packed. Everyone was saying you gotta show up early to get through airport security. I will say though, right, this was maybe a case where I bought into the media overhype maybe too much. I showed up like an hour earlier than I normally would for my flight back here to Detroit. First of all, my flight got delayed again once I was there, so it took a little bit longer, to board and everything. So I was thankful that I had more time, but security wasn't even that backed up like everyone was saying. So I showed up an hour early essentially for no reason because again, the flight got pushed back anyway. So right now, these airlines, if they keep going down, they will become interesting to me. I mean, we saw Southwest right on the onset of the pandemic get all the way down to about $20 a share, come all the way back up to 65. So it's currently $20 off of its highs from back in April, back from about 7 months ago. The stock has depreciated about 33%. So I don't know. I mean, to me, it's like, look, Southwest Airlines is not worth 33% less than it was 7 months ago. So why is the stock trading down so much? You could argue it's just technicals. You could argue the travel hasn't picked up to pre-pandemic levels like yet that a lot of people have expected. But looks like we're getting down to this key support right here at about $44, $43. So I would wait to see if we bounce off this support. If we see a couple green candles in a row, again, this is the daily chart, then that would be a sign of reversal for me, saying, okay, look, we've gotten beaten down to this point. Now we're coming back up, and on that reversal, I'm not going to try to fish the bottom. I don't need to try to catch the exact moment or day that it hits that bottom. I'd rather wait till it starts coming back up and I have that trend at my back. And then I can buy it and try to swing it back up to maybe $52 or even this $56 price point. So I'm definitely watching the airlines. Of course, we will have to keep this new COVID variant, see how it's reacting in the news. But yeah, these airlines are getting beaten down. Another set of companies are the cruise lines. If we look at Carnival, a lot of these stocks have never gotten back to their pre-COVID levels. Any other industry has stocks in it that has gotten back to pre-pandemic levels. But if we look at the cruise lines, it's really interesting because look at Carnival. I mean, trading all the way up at $50, currently at 17. So I I get it. There are other investment opportunities out there that might be catching investors' eyes more than the cruise lines. Um, but to me, this has a lot of work to get back up to here. And so again, just like the airlines, these are the companies that are going to get hit hardest by the new COVID variant fears. But I don't know. Let me know in the chat if you know why you think that cruise lines haven't even gotten close to coming back up to their pre-pandemic levels. Obviously, they're making a lot less money. But I think a lot of investors that have been buying these shares are thinking, okay, maybe not in the next year this will be back at $50. Maybe not even the next 2 years, but 5 years down the line, they expect these stocks to come back. You can see that even before the pandemic, the stock was in a massive downtrend going from 72 all the way down to 50. I don't know, not to sound too morbid, but maybe part of the arguments to be made, hey, look, COVID has, a lot of older people have passed away from COVID. That's that's cruise line's main demographic. Maybe there's going to be less people out there that really want to take cruises. I have no clue. Easy Mike saying Airbnb looks good. Again, that's another company that got hit hard last Friday by the new variant news, Omicron. I think I'm saying that right. Honestly, I don't know. But yeah, Airbnb, let's go in a little bit of a shorter time frame. Oh yeah, look at that. That's beautiful. This is one of those stocks. There's a few stocks out there that I think that really can be, 5, 10 baggers over the next 10 years. And I think Airbnb is one of them. I mean, the stocks, um, it's been really volatile since it's open. Let's see if we go back, back here in September. But was that right? I thought we were earlier than that. Yeah, I mean, I would not be surprised if, whoa, what's going on now? I would not be surprised if we're looking at Airbnb in 5 years and it's 5 times the share price that it is now. Yeah, I guess it really was just only back there in December. Yeah. So yeah, it's been around for about a year. Been very volatile, right? We saw it get all the way up to about $220, come all the way back down to 120. I don't know what I was thinking that I didn't add shares of this here. Again, get back above the $200 level, and then we crash back down to about 160. Now we're right here at 178. I like this stock a lot, long term. Easy, Mike. Let me know how you are trading it. What's up, Freddie P in the chat? Shelly, no, I don't have any call here. I'll pull up my Robinhood portfolio for everyone. I have one open call right now on Snapchat. The monthlies on December 17th, and they're down about 50% right now. So if I see that the Snapchat's not moving the way I want it to tomorrow, I'll probably cut those losses altogether. But as you can see, I even pulled more money out of my Robinhood. I do have about $800 worth of buying power, so I can make some trades, but I cannot make any more day trades. I'm officially restricted from day trades for 90 days. So any trades I will be making will be, at least the next day. Like maybe I'll open some options right around close and then sell them the next morning at open. I can do stuff like that. I can't buy and sell in the same day right now. But yeah, as you can see, these Snapchat calls have not been going my way. I bought them, I think about up here for like 190 a contract. I only have two, so it's not like a huge position or anything. But my thesis is just that, we saw this huge gap down after earnings, right? From 76. And it looked like last week for a little bit, we were finding the first signs of reversal finally, because we moved all the way down here to about 55, continued to move down to even close to $45. Started to move back up a tad, but it hasn't really been working out. So again, if Snapchat's down again tomorrow, I'm just going to cut my losses, say, hey, look, Snapchat's still in a downtrend. These calls that expire on the 17th are not working for me. You said last week Benzinga is doing a fundraiser. Yeah, we might. All right, let me know in the chat what you guys are looking at. I'll pull it up on Benzinga Pro. We'll get a look at the chart. We'll see if any news is moving the stock. But going back to Thanksgiving, here's what I want to know. I want to know, A, did finance, investing, stocks come up in any capacity at your Thanksgiving? And did crypto specifically? So let me know in the chat. Yes, my parents were talking about stocks. They were talking about investing. And let me know too. Yes, crypto came up. My brother, my sister, people at Thanksgiving were talking about Dogecoin, whatever it is. I want to know how finance in general, how the markets came up at Thanksgiving and particularly with crypto. I'm curious about what the conversations were like surrounding cryptocurrency. If neither came up, that's fine. If neither investing or crypto came up in general at your Thanksgiving, let me know what was the most, maybe not your favorite topic that came up, but maybe like the most controversial, right? Did your parent or did your family start talking about politics or Kyle Rittenhouse or anything? Because I tried to steer the conversation very clear of all that at our Thanksgiving. We did talk about crypto. We did talk about financial markets and stocks and everything. Let's see. I'm seeing Lucian saying he's looking at MP. Let's take a look at MP. Wow. Materials having a good day, up 4.5% today. NVIDIA sympathy run. We also have Qualcomm is moving a lot today. I always forget the ticker for Qualcomm. That shouldn't be that hard. QCOM. Yeah, Qualcomm is up basically the same as NVIDIA, but NVIDIA right now is up more than AMD, up more than Micron. So it's showing relative strength against at least some of its competitors in the industry. And really, that's just showing me that, hey, for whatever reason, investors are more confident in uh, in NVIDIA right now than some of its competitors. Jay Rice saying is Wall Street no like Twitter new CEO, I'd say. Yeah, Jay Rice, I can get behind that sentiment because we can see when we're looking at the chart that initially Twitter was moving up, then it came down when the new CEO was announced. Now it's coming back up. So I think just let's give Mr. Market time for him or her to figure out how he feels about the new Twitter CEO. The stock could be trading 10% higher in a month from now. It could be trading 10% lower. Who knows? Although Jay Rice, you are right. The immediate reaction it seems to be is kind of bearish for Twitter. Let's see what we got in the chat. Igor saying yes, crypto came up over Thanksgiving. No one else had Bitcoin or crypto come up at their Thanksgiving. Happy, my boy Happy. How's it going? Everyone, listen to Happy. Smash the like if you've got time. It only takes a second and it is 100% free, completely free. Pedizzle, I don't know how you say that, wants to look at KTTA. Of course, this is a stock that we broke the news on last week. Stock ran all the way up to, what's the high there? $8.50. Now back at $5. Before we broke the news last week, the stock was trading about $3. I don't know. I'm always on the side that, like, look, if you want to try to trade these high flyer biotech names, by all means, more power to you. Just know it's akin to go into the casino. It's very, like, you might as well be shooting craps, playing roulette at that point, unless you have some sort of edge. I certainly do not, because I don't, half the time I don't understand, the science behind what's going on with what a biotech company is doing. That's not to say you can't, go out and make a lot of money trading these things. It's just a little harder for me, with some of these growth tech stocks, fintech stocks, value stocks. I feel like, okay, I can kind of feel the thesis of what's going on with other investors. I have a gauge of where I think the stock is going, how markets are looking. With biotech, I'm completely out of the loop. If someone gives me the pitch on a biotech company, it always sounds good to me. That's my problem. So I'm like, oh, that drug sounds really, really cool. That sounds very promising. And I'd probably invest in every single biotech company I'd hear about and ended up losing a lot of money. Right. Easy Mike saying trade what you see. That's good advice there. So again, let me know what everyone's trading today. Let me know what you're looking at. We've talked about Twitter CEO Jack Dorsey stepping down. They announced their new CEO. We talked about the Omicron, the new COVID fears. Look. Bottom line here. Let's pull up the SPY. We can see very clearly, right? These are daily charts. We can see very clearly the initial reaction. So November 24th, this was last Wednesday, the day before Thanksgiving. SPY closes at $469 a share, right about. The next day, the markets open, closed for Thanksgiving, Friday. So again, that's kind of how the way the week was set up last week wasn't great, because Thursday, the market wasn't open, and Thursday allowed for all, like, the news and headlines to spread about Omicron again on Friday. Market opened at 462. Never really got much above that open price. The high of the day was 463.90. The low of the day was 457.77. Closed at 458.97. So we went from a 469 close to a 458. So about $11 difference. That was the SPY's biggest red day in more than a year, I'm pretty sure. And so the market's initial reaction to these Omicron fears were, this is terrible, big sell-off. We saw Moderna up 20%. We saw Zoom up 10%. All these COVID plays that we had saw running last year throughout COVID were up big last Friday, while most of the stocks were down. And then today, it's the tale of two tapes, right? Market's up, it's green, everything looks good. So to me, that's saying, look, the initial fears were overblown. You know, if you look at the headlines today, it looks like the media still wants to make this something that, hey, everyone should be worried about. But the markets are saying, no, this isn't as big of a deal as everyone thought last Friday. People overreacted, presented good buying opportunities. Oh, Easy Mike saying Powell is talking soon. So yeah, we'll watch out for that. Yeah, I'm seeing Roblox in the chat. Roblox was running last week. Let's check it. I haven't checked it out today. Oh my god, up again. Yeah, I mean this stock's just on a monster tear. Look at this. We go back to the beginning of the month. It was trading at $80. It's at 124 right now. So that's up what 50% in a month. I mean that's just insane. We're seeing it's oh my god. All right, we got to check back in on NVIDIA. I'm seeing it in the chat, which means oh my god, we're breaking out. Even speaking of a stock that's up 50% over the last month, look at this thing. Hold on, look at this thing. I mean, this is a crazy run, right? From COVID all the way up here, but look at this run. Oh my god, look what happens from the beginning of October. I'm talking right here. We closed at 204. We're at 330 right now. The stock has run $130 in 2 months. More than 50% run in 2 months. In NVIDIA, this isn't a small stock. This isn't a penny stock. This isn't even a mid-cap stock. This is a mega-cap stock, almost $1 trillion company running more than $100 in 2 months. You could have looked at it right here, right? At 242 and said, oh no, this stock has already run up 20% in a month. It's overextended. It's oversold, right? We have to short it. It can't go. And then it runs another $80. I mean, this stock is an absolute monster. Again, I've said it before. I'll say it again. This may be like my favorite stock, not only right now, but of all time. I've been on NVIDIA if I would have just parked a lot of my money in NVIDIA like a while ago, I would have made so much money, but I've been talking about it for years now. Never really, I should have backed it up with more of my money, but I do have shares in my IRA up well over 100% now. I, got them pre-split at like, I want to say $400 pre-split. So then now I have, it was a good trade. Let's just say that, but I don't plan on ever touching that in my IRA. Even if you could make the argument that I should, trim some, that I'm up so much in my IRA that I should trim some, put it in other stuff. But I just love this stock too much. I think any type of transformative technology that you can think about, that we're going to see in the next 10, 20, 30 years, whether it's AI, self-driving, which kind of goes hand in hand with AI, robotics, gaming, cryptocurrency. NVIDIA is going to have its hands in all of it. Not only have its hands, but be like the leader, the technology behind it, the thing behind the thing, everything. So, will other competitors catch up technology-wise to NVIDIA? Maybe. I don't know. Who knows? But all I know is right now it's clear who has the edge in this space. It's clear it's NVIDIA. It's clear investors think so. So we'll be watching this all week. Again, sure, could you make the argument that it's overextended right now? It's overbought. It's going to come back down a few dollars. Sure. Do I think this stock is going to be higher than it is today a year from now? Yes. Do I think it's going to be higher 10 years from now than it is today? Yes, 100%. So those are my takes on NVIDIA. Again, disclosure, I am a shareholder. Another disclosure, this is not investment advice, purely entertainment and educational purposes only. But yeah, just in case you're curious, my thoughts on NVIDIA. I love it. I love it like a fat kid love cake. All right. Anything else we're watching today? Again, yeah, the dollar scramble is saying the dollar is overvalued. All the printing's going on. Look, bottom line is careful with some of these big growth tech stock names, NVIDIA included, because if we see that 10-year bond yield hike up, these growth stocks do get hit the hardest. Honestly, let me check I don't even know if we have the bond yield on here. Because so last Friday when we saw the Omicron fears hit the market, we saw the 10-year bond yield drop. I think down to about like 1.5 when it was at about 1.8 higher. So really that if we see those, let me try to find a chart of that 10-year bond yield. If we see that stay there, that's very good for a lot of these growth stock tech names. If we see it start hiking back up, then we could see. So we see it up barely today, right? All right, so I'll pull up. Um, if we see it, if we see that bond yield come back up more than it is today, we could see some of those growth tech stocks get hit by that. But again, all right, I'm looking at it right now. So it was at 1.65 last week, then dropped all the way down to below 1.5. Now we're back up 1.5 barely. So yeah, it's something to keep an eye on just if you're trading a lot of these growth tech stock names. Thank you, Easy Mike. And yeah, so of course, if we see Fed raise rates, then these growth stocks will get hit again. So just be careful with them. But right now, everything looks good. We'll see. We can do this by checking. If you're ever curious just about the strength in tech and growth stocks versus the overall market, just check QQQ versus SPY. Right, QQQ is up 2% today. SPY is up 1.3, right? So that's showing me that big investors out there are not worried about the bond yield. They're not worried about Fed hiking up interest rates right now. They just like growth more than everything else today, right? We can check that on the Dow too, Dow Industrial Average, right? The Dow's underperforming SPY. So yeah, let me know again what you're walking in the BlackRock. Which one is it BCX? Is that the one we want to check out? No. What are you talking about? Easy Mike. Easy Mike saying it's up $18. Maybe he's talking about Blackstone, BX. Ooh, Blackstone's having a good day though. If you were watching us when we had Ross Gerber on a couple weeks ago, he was talking about Blackstone, which to me, hearing him talk about Blackstone really perked up my ears because Gerber's famously a big like growth tech investor, right? He's in NVDA, he's in Tesla, he's in Roblox, he's in all these tech names. But his pitch on Blackstone was very good, and I liked it. And I like anytime someone has conviction in something that's outside of their wheelhouse, right? Like if I'm trading, I don't know, tech stocks all the time, and I'm like, oh, I've got this value name that I really like though, and I have a strong thesis to back it up. I almost think that I like it more than someone who's talking about a company of something they trade all the time, right? Oh, BLK. Yeah, I'm sorry. See, this is why I need Spencer here, right? Wow, yeah, BlackRock up $20 right now, up 2.24%. Looking at the chart, this does look like we had this little like double top action going on. So I'd watch it for the rest of this week. If we see a couple more green days in a row following today, right? If we have another green day tomorrow, another green day on Wednesday, okay, that's a sign to me that we're getting a reversal. We're bouncing off this level where we have previous resistance right here at about $900. Right, you can go back right here, see this point. But overall, a lot of times this double top, when you see two tops like this, it's a sign that the stock's going to come back down, right? I'm not necessarily like, okay, I follow technicals like the Bible. No, that's not how I trade. I don't think anyone really um, should do that. There are people out there that don't care about the fundamentals, don't even care what a company does. They just look at the chart and trade it based off the chart. I like to take in both, right? I like to look at the chart. I like to see what's going on with the company, what they're doing, how does the current economic outlook impact what the company's doing, etc. So if I like the fundamentals of a company, if I think the thesis is bullish and the chart looks good, then I'm in. If I love the company, I think the thesis is good, but the chart doesn't look good to me, then maybe I just put it on my watch list and I wait. I wait for it to come down further because I don't think the chart looks good. So I would just watch this because this double top to me doesn't look great. But like I said, a couple more green candles in a row, then we're not talking about a downtrend. We're talking about an uptrend. So I would just watch it this week. Of course, BlackRock is an absolute monster. I mean, let's check the market cap on this thing. Yeah, 136 billion. I think BlackRock holds the most assets under management out of any financial institute. Quebec, yep, Matt Hammond is in the waiting room. He will be joining us in about 3 minutes. We'll be talking some IPOs this week. Excited to get Matt back on. Yeah, Jay brings up a good point. It's almost a risk off for value day. Steel, banks, everything all down. Yeah, let's check in on Boeing. Well, the Boeing, so I get why Boeing's down a little bit, and you can see because we're looking at like an intraday chart here. We crashed down pretty hard, got to like 195. I'm gonna pull this out on a daily chart. I think the thesis behind why Boeing's down right now is because if travel demand goes down, there's less demand for these planes from different airline companies. So I think we all just have to kind of like wait and see what goes on with this Omicron virus. I don't think it's going to end up being that big of a deal. Of course, hey, a lot of people said that about COVID in the first place. But from initial reports of what we're seeing is that like it's kind of like, hey, look, this might spread quicker, but it doesn't look like symptoms are that serious. Who knows? I think the market speaks for itself, right? I think if this was really like the new Armageddon, like the new, oh my God, we're going back into lockdown, everything that markets would not be up the way they are right now. That's just my feeling. Of course, there are industries that are going to get hit harder than others. Let's look at, I mean, look, even Darden restaurants is up today, right? If this was really something that was going to cause people to not be able to go back into restaurants, I don't think Darden would be up 1.3% today. So yeah, let's just take a chill pill. Everyone talking about Omicron. Oh my God, look at Apple. Woo! Apple up 2.5% today. After Matt Hammond, we will talk about the Santa Claus rally, right? Which stocks will benefit from the holiday season? Apple very well could be one of those. Which stocks may not benefit from the holiday season when they're expected to? There have been some retail names that have just been so strong over this past year that I'm not sure if we can continue that same momentum into the holiday this year. I mean, let's take a look. So I'm looking at Dillard's right now. Dillard's on November 27th last year closed at $49.68. Right? This is why I think this is crazy, because we had already had, right? We had shoppers back on Black Friday. It wasn't like everything was locked down. Were we back to pre-COVID numbers? No, not at all. But at that point, the writing was on the wall that like, hey, look, people are shopping in stores. They are buying nice clothes right now, whatever it is. We closed at $49.68 a year ago today. Now the stock is at $341. And mind you, this is a stock that got all the way up to $395. We got all the way up to $416. So we're actually trading down at 341, about $70 from its highs. So there's a lot of stocks that we're looking at this holiday season, right? We have Dillard's, we have Apple. Let me know in the chat which stocks you'll be looking at this holiday season. Of course, we'll need some. We have some preliminary numbers from Black Friday, but we'll need some more time before we get to really see which companies did well this Black Friday. All right. Without further ado, going to bring my man Matt Hammond on from IPO Warriors. We'll be talking about some IPOs this week. Let us know in the chat if you have any questions about any specific IPOs. I know Matt's got his little presentation queued up. So without further ado, let's welcome on Matt Hammond. Hey, Matt, how's it going?
Not too bad. How you doing, producer AB?
Good. Did you have a good holiday?
I was pretty good. I'm out here in Ukraine, so my wife put together a nice Thanksgiving feast, I guess. She single-handedly, with a little bit of my help, cooked a turkey in the oven, made cranberry sauce from scratch. We had mashed potatoes. Felt like home. So
beautiful. Yeah, I was curious if you do the traditional, U.S. Thanksgiving, or if you do something a little different since you're out there in the Ukraine.
Oh, there is no other Thanksgiving than the U.S. one, but yeah, we did do something, which was we had to trek across town. We had reserved a turkey in advance. brought it home, cooked it up, had a pretty good time with it. And, my daughter's year and a half old now, so too early for her to really remember this, but sort of trying to get that sense of tradition instilled early. And Thanksgivings are always a great memory from my childhood, and we're trying to do the same thing for our kid. So we did not talk crypto at the dinner table this year. Actually, just other than playing a few minor, the Bitcoin mining stocks, I have not really delved into crypto. I fully understand the technology behind it. I just don't have the same insights that I have into it that I do with the stock market, specifically with IPOs, which I was watching Mitch's show earlier today. He's really talking about what it takes to become, like a professional trader. And I'm not a professional trader, but I do make a lot more money trading stocks than I do from kind of my normal job as a software designer, software architect, and have certainly considered that idea of moving into it. But he said, you got to figure out what you do well. What is your niche? What are your strong suits? And then kind of focus on that and keep a history of your trades and recognize where, we'd all be, love to do everything really great. But truth is, I'm not a great day trader. Swing trading, I, have done well when the market's doing well, and that'll lull you into a kind of false sense of confidence. And then when the market pulls back, you realize, I was buying dips that weren't dips and names that I didn't really believe in. And, actually, if I just stayed in what I was good at, my returns, would be even stronger. So for me, it's IPO trading, it's SPAC trading, it's focusing on those things. And, to your note about biotechs, like I feel exactly the same way, especially with biotech IPOs. And I pretty much crossed them off the list of even trying to understand, because everything, is going to cure cancer or make the world a better place for, reduce pain, solve Alzheimer's. I mean, every single drug sounds like, oh, wow, well, it sounds good. Like I should play that.
Right. Yeah.
Having said that, IINN turned out to be one of my biggest wins this year, but I was just so convinced that eventually that would run. And I piled up a huge position buying on the dip, and then one little headline sent it to the moon. And I still think it's one of these.
Which one was that?
It's Inspira Technologies. It's IINN.
Oh, right. Yeah, that was a high. Yeah.
So that's a low float. There's still a lot of catalysts on the road ahead for them. And the market right now, I mean, we don't know what it'll do later, but recently these kind of low float IPOs in the last year, I'm talking, it really was last week and the week before, I guess, KTTA, ISPC, APVO. There's this kind of basket of recent low float IPOs that have just been high flyers. But if you bought the IPO, you'd have been bag holding for a long time in a pretty ugly position until these pops came. And unless you're super convinced in them and you're kind of buying that dip, I bought the dip on IINN to the tune of about 17,000 shares. I had a much bigger position than I ever meant to take, but it kept dipping and I believed in it so firmly that when it did rip, I made a kind of that level up trade that brings your portfolio into the, up into another level. But especially since this week we don't have a whole lot on the schedule, but we do have some low float IPOs that are biotech. I did want to touch on those. And one thing I really wanted to point out is that, first of all, you don't know when that run is going to come. And second of all, when that run comes, you have to be aware of that follow-up offering. They started their IPO with the almost token amount of money to just get them through to the next phase of their trial. And then when they release that next headline, they already know in advance, hey, we're reaching this milestone that we were hoping to get to with the last batch of money that we had from the IPO. And they're fully intending to raise more money. And while KTTA, it hasn't come back. It was at like 8 or 9, and then they dropped the news of the follow-up offering, and it has come back a little bit from there, but it's down at, between $4 and $5 and is kind of playing on pure momentum right now. Those shares are going to come to the market, and this is probably going to get forgotten about for a while until the next, the next stage of FDA approvals or the next research gets released. That can be a really long time, and it's a very binary event. You know, they can get a bad letter from the FDA, and all of a sudden the shares just tank again, even deeper, and you're sitting there in a bag that, you know, could take forever to turn around. So really be aware of that when you're playing these recent low float IPOs. They're low float today, but they literally could not be tomorrow. BFRI, I was watching it this morning, it's flying up around 10, and then they do a share offering, it dropped all of a sudden to like mid sixes, and then it's recovered. I mean, those shares that are part of the offering have not recovered, so they're technically is still only a low float trading on the, you know, on the market. But the market reacted right away. Day traders are kind of buoying this up, but be really careful trying to play these at this point. And if you are in a low float IPO, you know, especially a biotech IPO early, and you get that rip that you were expecting, that you were hoping for, that you're waiting on, don't be holding for like 3 or 4 days without understanding that there's very likely going to be a follow-up offering, because that's what these companies are in the stock market for. They're not in the stock market to make you money. They're in the stock market to raise money for their company, and biotechs are raising money to get to the next round of funding, to raise more money at that point, and that's dilution is going to have a significant impact on the share price, especially when something is inflated based on this kind of momentum, meme, volume and price jumps that we're seeing. And the market itself has a very short attention span right now. This is, I remember at the beginning of COVID, everybody started piling into stocks. We'd see runs in like, remember Genus and XSPA, which I didn't get involved in. They didn't make any sense to me. But those momentum plays were lasting for like a week and a half. And we're not really seeing that so much anymore. We're seeing a lot of, especially the de-SPAC mergers. It's like one day. We saw Wejo, which was Boso. Boso ripped from like 10 to 19, and now it's at 7. So if you're playing these kind of ladder up moves, be light on your feet. Don't get too greedy. And especially with the low float IPOs, just, you know, be aware of that follow-up offering, because I think a lot of traders, especially if you're a new trader and you're playing kind of these meme hypes stocks, you're not used to that. You're not used to seeing that. All of a sudden, it's just one big red candle, you know, wipes out 40% of the share price. And you're like, what the hell happened? By the time you've looked it up on Twitter or Google News or Benzinga Pro to figure out what just happened, you know, you've already lost your trade, and now you're potentially in a bag hole or praying for a bailout. But let's jump into the IPOs this week. Anyway, the fundraising campaign, the Benzinga gear that they sent out is on the way out to Ukraine, along with a few other things that kind of the supporters who thankfully contributed to this. Already the lighting is quite a bit better. We're going to get a new lens. You'll be able to see a little bit more of me, which is not the main event, but it will improve the streaming quality. And Benzinga kicked out a microphone, headset, and LCD monitor, so I can do less staring around to see myself in the screen and more staring at the camera. Anyway, let's recap last week, because we had a really interesting one. It was AERC, which was a company called AeroClean Technologies. It was a super low float, which is, again, something that's catching a lot of anything low float IPO they've had. I thought it was getting played out. I think this one came along, and it had a COVID angle, which got me excited. I was actually pretty eager to play this one. The IPO price was $10, and then it debuted in the pre-debut indicator, which we can see on the Webull mobile app and also on the desktop app now, started showing $50 as the debut price. And I just said, you know, throw that one out. You know, I'm not going to buy a $10 IPO price stock that I've never heard of at $50. Then they tested 60, and I was just kind of laughing and going, who the what? And then they brought it down a little bit to 40, and the float was 2.3 million shares, but the number of shares being shown in the pre-debut indicator, where they show you like how many shares are being offered, how many buy orders are there, how many sell orders. The buy orders were outpacing the sell orders by a couple hundred shares, which is a really low number, to show. And it was only 27,000 shares. So it's kind of like, well, how could this drop if nobody's selling? I thought about it, but by the time I put two and two together and thought about a position that would be suitable to my risk appetite, it had already gone live and it went up through 5 halts. So from 40 to 44, opened at 50, 50 to 55, opened at something like 62. I mean, it just kept halting up and halting up. Nobody was selling. People were buying it for some reason. And we see some of these low float IPOs just catch fire like this. It's usually a stealth IPO that does this. Those are these random Chinese, almost intentionally hidden IPOs. And I thought maybe they would pull one on Wednesday, so I was looking out for one, but ended up being one that was less obvious in terms of any connection to potential money laundering scams, and more just COVID play on a low volume day where no one else was playing anything else, and this one just ripped. So something to watch for in the future: low float IPOs with ridiculous debut premium and low volume on the sell side and a high buy side imbalance on the indicator. You could have made a lot of money if you spotted this one early, and unfortunately I'll have to catch the next one. So this week I'm going to there's really only one what I would consider like a traditional IPO on the calendar here. There are a few that are uplistings, and I generally don't like uplistings because they've already been kind of that news that the company is now being uplisted to the NASDAQ or NYSE, it's usually the NASDAQ, has already been priced in. In other words, this was already trading on the OTC or on in this case, the Toronto Stock Exchange. And when they announced that they're uplisting, the price goes up already. So by the time they actually list on complete the uplisting, except for a few cases, we've seen them drop pretty hard. People see it as a liquidation event for the shareholders. And there's also just a lot of, I don't think people have a lot of confidence in them. The ones that have done well have been in kind of buzzy industries like Bitcoin was ripping, and some Bitcoin miners uplisted. But generally speaking, uplistings, unless there's some angle that's particularly enticing, I tend not to see them do all that well. Nuvectis Pharma, this is the one Pureplay IPO for the week. Some kind of precision medicines for oncology. Just like you, I don't know anything about, I don't know enough about these, and I don't think the market knows enough about these to really give most of them a big jump on their IPO debut. We have seen a few biotechs really run on the IPO, but 9 times out of 10, they seem to just kind of drop. And the investors that they're looking for are, kind of expert institutional type of investors who are willing to hold these and, cash, and they will be also cashing out before the next offering, if not, or doubling down. But I usually avoid these, but given that the market is so keen on these and other things are kind of getting ignored right now, it might be interesting to watch this. If I see a lot of Twitter, hype, a lot of buzz on Reddit, and then in the pre-debut indication, we see a price that's 20 or 30 or 40% above the IPO price, and maybe people are like, get ready to pile in, and it's worth a play. But the other reason I don't like these for IPO plays is because the catalysts are so few and far between. You're not very often going to see, and most IPOs have some kind of media silent period following the debut of 30 days, usually. So if you do get a bad debut, it's not like, Rivian, for example, didn't have a great debut. It did go up from about 106 to 119, but then dropped pretty hard all the way down to 95. And I think closed day one at about 106. So if you didn't sell that initial spike and, then we're kind of holding for a rebound, you might have gotten caught in at least an overnight bag. But then all the media could talk about for like 2 or 3 days was the Rivian IPO. So you got bailed out when everybody who wasn't hip to the IPO debut picked up on the fact that, hey, this new EV that's like the Tesla of pickup trucks that has a relationship with Amazon, everybody got all excited who didn't hear about it before and kind of non-IPO traders, non-day traders who are still stock investors heard about it on the overnight media play, and then you got bailed out from there. So a lot of brand name recognition, a lot of IPO debuts that have some kind of brand name recognition, you can get bailed out on day two, even if day one isn't that great, because people recognize the brand and they read the headlines overnight and they come in on day two. And you're not going to get that with biotech, and you're not going to get much of a catalyst until they have some kind of announcement or FDA approval, and that can take months. So I'm very, very cautious with these. Austin Gold, now we're going to do 2 IPOs that are tentatively on the calendar, but this one has been rescheduled about 3 times. So it's Gold Exploration in Nevada, the pre-revenue, their website's a joke. Roth Capital is the underwriter. People don't seem to like them very much. I think it's been rescheduled at least 3 times now. But the CEO did sell his previous gold prospecting company, Pretium Resources, for $2.8 billion, which offered like a 30% premium on the share price when he sold it. So I can't say that this guy looks like a scam. The float is super low. Gold, maybe it's interesting right now if people are tentative about the stock market, but I don't know. I'll watch it. Not particularly exciting. Here we have another IPO that is Biotech Intensity Therapeutics. It's a clinical stage biotech focused on localized cancer reduction leading to anti-cancer immune activation via direct injection into cancer tumors. Again, they could put almost any words. All I heard was cancer, and clinical stage. So it's a long way from producing profits. It's a long way from getting FDA approval. The low float is 1.5 million shares, though, so it wouldn't take that many people to pile in if the existing shareholders decide to hold it to send this thing on a wild run. I don't know why they would, but I didn't know why they would do what they did to some of the other low float IPOs that have run like crazy. So keep an eye on it. If NVCT ends up doing something wild, then this will be on Wednesday, and then these unscheduled ones usually go Friday, especially biotech. So if one runs, keep an eye on people piling to this one. Maybe it's worth a little play. Just don't get greedy. They're not going to do a follow-up offering right away, but I'm not sure that there's really going to be much interest on this. And if you do get stuck, you're either going to be eating a loss right away or bag holding for a really long time. So in Canex Healthcare IXHL, this one is also to be determined. Who knows if it'll actually go live? Another Roth Capital offering, so beware. It's an Australian-based company. They do research and development based on synthetic cannabinoids. So, psychedelic medicine, weed for medicine. These are interesting topics. It could be buzzy. It's only 1.5 million shares, but it is an uplisting. And the last uplisting we saw from ASX was also 1.5 million shares, or it was 1.5 million, 1 million units. Those units turned out to represent 2 shares plus a warrant, and that was for AHI. It really didn't do well. It debuted at something like 550 and dropped all the way to 3 before it kind of rebounded a little bit. I think it became a target for just the low float, the fact that it was a low float recent IPO. So I'm probably not going to play this. There's just too many things that require combing through the S1 the F1, I guess it is for a foreign company, to understand how all the warrants and the 80, the American depository shares are going to work. And day traders seem to not really find that all that exciting to trade on. So what is interesting to me, again, I'm going to mention it. I mentioned it last week, is these stealth IPOs. And the stealth IPOs are a little bit tied to some of these other Chinese names that we've seen. I called out last week PLIN, which is up 10% today. PLIN was at about $1.40 when I called it out last Monday. Now it's at $2.07. It's complete garbage. I mean, it's a Chinese grocery store. Pets, I called that out on September 30th when it was $1.30 or $1.40. Now it's at $4.85. Also garbage. It's literally a Chinese dog food company. And the reason that these companies are going up and are running is because nothing to do with the underlying company. But what is happening, and at least my theory, which I've floated to a few, big money people who say, yeah, it's an interesting theory and I can't debate, and it's interesting. We can't trade on it, but the theory is simply wealthy Chinese are in a position where they're panicking. They've seen what's happened to Jack Ma. They've heard what the government said about cracking down on the wealthy. They understand that there's tensions over the Taiwan Strait, that there's tensions with America, that there are semiconductor shortages. All of this has a negative impact, not to mention the real estate problems, or the problems in the real estate economy there. And they're looking to get their money out of China. And one way that this can be done is through the stock market. And the technique works something like, well, you move shares to somebody outside of China, and then with all your money, you just buy up all those shares at as expensive a price as you can, basically moving your money to the account of whoever you gave all those shares to. And since you control that to some degree through either a direct offering, as we saw with PLIN and with PETS, or through an IPO, such as we saw with UTME, TIRX, EJH, JZXN. I mean, these were all like $5 IPOs that went, CPOP, $5 IPOs that went to like $50, $60 within, a day or two after the IPO, for companies that were laughably bad in terms of what their underlying, business was. EJH was literally a like cleaning services company. I don't even know what TIRX or JZXN did. W&W was kind of the original one. And these all have the same underwriters. They're generally kind of even, the underwriters even use the same law firms, and co-underwrite some of these. So the two that I have on watch, one is GSUN. We've talked about this before. We talked about it last week. I was kind of expecting that they were going to do it last week. They did, and the reason that they're on watch now is they've been on watch since about May, and they updated one of their filings 2 weeks ago. So I'm watching this one. It's Chinese education, but that's not the point. It's 5 million shares. Network One Financial is the underwriter. And if we see a debut that's kind of above, they usually price at about $4 or $5. We see this debut, between usually like $9 to $18. I will buy a lot of shares and, expect it to just halt. Sometimes they rip it up to like 40 or 45 before they even debut it, in which case I can't touch that. But the first one is GSUN. The next one is MULG, and we talked about this one a long time ago as well. And this is Muliang Viagu Technology Company. They are a Chinese organic fertilizer company, and their brands are Zhongbao, Fukang, and Muliang. So we are literally talking about a Fukang Chinese chicken crap company. And
I don't know. I mean, I don't know how to feel about that one. I'm out on that one, Matt.
I am going to be very bullish on this one.
Really?
And the reason is twofold. One is that it's literally Chinese chicken crap. The ones that have run have been so bad that they almost are intentionally kind of hiding. I call these stealth IPOs because when I first noticed them, I was missing them. I am studying all the IPOs for the week ahead of time, researching all of them, pouring through F1s and S1 filings, and then I forget which the first one might have been WNW, and it just ripped up to from a $7 debut to like $160 in 3 days. I'm just like, what? I didn't even what is this company? And then I saw it just IPO'd like 3 days ago. How did I miss that? I didn't even know that it existed. And I started researching. I was like, the underwriter Bosted Securities. I've never heard of them. And then I started following them, and then set up alerts for Bosted. And then I caught a couple of the Bosted offerings, and they all did really well. We're talking like 100%, 150% gains in the same day. So anytime I see Bosted Securities as an underwriter of anything, and that's what put PETS on the radar for me. PETS was trading at like $2 back in mid-September. And then I got an update on my Bosted signals that they were doing a $30 million share offering. And the share offering price was, if you counted the warrants and the share price, like 30 cents a share. And you're just like, well, how can they do a share offering for 30 million shares on a 9 million share company and not sink and not be a danger of getting themselves delisted for the stock trading below $1? And I researched it more. I saw that, okay, well, insiders own 82% of the company, and something is, when I see something that's counterintuitive, it makes me, and Bosted's involved, I say, okay, I'll buy 5,000 shares. And I was right. It took about a month, but then it ripped up to like $9. I sold out my cost basis, and now I'm waiting to see if maybe they had higher valuation in mind. Otherwise, I'll say, okay, well, I'm still way up, and I'll take my profits at some point. But PLIN, same exact thing. It was about 2 weeks ago. We caught another direct offering, and I believe Bosted did the original IPO on PLIN, and now it's up. From, I got in at like $1.40. Now it's at $2.10 a week later, and I don't think it's ripped yet. But there's something going on here. These aren't, you're looking at it and you're like, well, a Chinese organized fertilizer company, how much money is in that? They use, there must be huge brands in that. That's not the point. The point is, and look, I put this clip in here. It's OTC right now. Look at the bid ask price here. Okay, the last price, it hasn't traded since December 2. Like, no shares have actually changed hands since December 2019. The bid price is $12. The ask price is $3,490. That's quite a spread, don't you think? So, anyway, if this one goes live, okay, and the comp for this one is FCUV. FCUV was another Bosted underwritten uplisting, and it debuted, or the uplisting was priced at like $5 or something. And for the first day after the pricing, it just kind of traded flat and down a little bit even. And then the next day it ripped up to like $30.
And then NCal in the chat's asking for the dates on these. Do you mind just running through the ones we've talked about so far and giving the actual IPO dates for each one?
Sure. Here we go. Skylight Health, to be determined. Nuvectis is Wednesday, December 1st. Austin Gold is scheduled for Friday, but it's been rescheduled so many times, I kind of don't expect it to ever go live. And then the others are probably Friday. Generally, we see Friday kind of like reserved for the oddities and biotechs. So when I see TBD, no date set, I generally think that it's going to be a Friday IPO. And if not Friday, it may not go live at all. So we're kind of like still working our way back. I was surprised that there were any IPOs last week. There were a few scheduled that got pulled. And, I think next week we'll start to see a few more names that might be a little bit more recognizable. But I expect these to be on the third, these last two. And the stealth ones usually go on Friday also. There'll be some obscure press release. I think it's a formality that they have to release. Some kind of, wire will go out on, and I usually get an alert in my, from my Google alerts that I have set up to catch these. But if I do get any news on, especially the stealth ones, I send out an email on the newsletter. If you go to ipowarriors.com, sign up for the newsletter, it's free. I'll send up write up on these later, these that we've covered today. I'll send that out in a few hours. And then otherwise, when I see something interesting, I'll, if I get how we'll know is because they'll have to release the pricing on the IPO usually the day before. And if I see that and I get that alert, then I send it out to everybody and say, hey, watch out for the stealth IPO. So people have caught them before, and, from my newsletter. And, I like it when I'm not the only one celebrating a big win. So I will send those out when I get them.
Beautiful. All right. So did we get through all those, Matt?
That's everything. Yep.
Beautiful. All right, y'all. Well, this is Matt Hammond from IPO Warriors. Like Matt said, go to ipowarriors.com to check out.
Someone just asked what time do they usually open. I would say that first of all, it's one of the questions I get every IPO that we play is when is this going to go live? When it's going to go live? We never know when it's going to go live. It's a balancing process where the people who bought IPO shares that do want to sell right away, commit to selling at whatever price they want to sell, and buyers, people like me who are trying to buy the debut, especially the ones that we like, we're putting in our limit orders to get filled right when it goes live. And once they've balanced out all those shares, and they will adjust the price until they find that balance, then the shares will go live. So with a high float IPO like Rivian, that can take hours and they won't go live until, I think that one went live at around 1 p.m. Eastern. These low float stealth IPOs, they're tricky. And I would say most of them go live between about 9:50 to about 10:30 a.m. Eastern time. And it always feels like they're trying to trick us. Like the one that we missed a couple weeks ago was SOPA, SOPA. We actually called it out on the show, and I was trying to play it, but Webull was showing the indication price. It showed like $11 and $12 and $13, and then it just showed zero. And I was like, what? Did they pull it? Something going on? And they just left it at zero, and then it went live at something like 15.50, and then ripped up to, I think it closed, day 2 it hit like 70, and ripped up to something like 50 at the close of day 1. So if you had caught it at 16 or 15.50 and rode it all the way to the end of the day, you'd have had like a 300 or 400% gain. But they do go pretty quickly because they are, in my opinion, intentionally trying to hide them. The floats are low to begin with, which is what makes them something that they can really rip into ridiculous prices that then facilitate that money laundering move. And if you want to try to catch them, you want to be kind of at your desk at probably 9:30, combing. Benzinga Pro often has when the pricing is going to start. Not always, but I use that for when they do have it. It'll say like MULG shares expected to begin pricing at 9:50. Trading expected, at 10 o'clock. They always say 10 minutes later. That's never, or very rarely, the case. But with these low flow stealth ones, they don't seem to want to dangle them around out there too long. They kind of want to like pair them up, move them out the door, and start whatever shenanigans they're up to before the market gains too much kind of awareness of what's happening. They'll rip, usually 1 or 2 halts before day traders start going, oh, it's one of these, everybody in, and that's when the real fireworks start. And they can be a lot of fun. I've made a ton of money on these. So Sam, crazy, say what you want, but the proof is in the pudding. And those who have played these before with me know that when these come along, it's a good time to, I like to cut my bags at that point. Anything I'm down in, clear up a bunch of money. And I played these kind of bit large to an almost comically crazy level. So keep an eye on them. They're fun. They're the most volatile play I think I've ever seen that make absolutely no sense. So
right. All right, y'all. Well, if you want more from Matt, go check him out on Twitter at Warrior IPO. Again, IPOwarriors.com is the website. Looks like you also got a Reddit, little subreddit, IPO Warriors r/IPO Warriors.
Yeah, so the subreddit, we are almost every day kind of chatting with each other, talking about, it's not just IPO talk, but we do focus on recent IPOs, SPACs. We talk a lot about whatever's halting during the day, but mostly IPO talk. And what we're really in there for is the IPO days. We are calling out the indication price, talking strategy before it goes. It's a pretty fun community. I mean, if you want to just kind of hang out on the IPO days and talk about and get pretty much coached through the trades, at least the entry, and we talk about different ideas there. There are different strategies than just buying the debut. You can try to ladder trade, set up a ladder of entries in case you do get an opening dip before it rips up. We're talking about what we see on level 2, where we're trying, what our targets are, how we're playing halts. So there's a lot of it's fun. We are live trading there. I do want to move towards live trading some of these on, YouTube, the same way we're doing the show now, do some live trading on these. And it's really just a fun community. I mean, I'm not running any paid subscription services at this point. People have been generous with donations when I've helped them win money. But for me, this is kind of like more fun than just trading by myself. And IPOs really are like an event. I mean, there's nothing really like it, in my opinion, where that there is a catalyst coming. This isn't where some people got to buy in at the early pre-market, or yes, some people get IPO allocations, but for the most part, people are not getting significant allocations that are trading these. And it's almost like it's more like watching a football game where you sit around getting excited. There's the build-up, there's the anticipation of the kickoff. You have your trades in. I mean, for me, I'm putting a significant amount of money on each of these trades, and I'm not gonna lie, I get excited. My heart's pounding, and I'm not the only one. And then it goes live, and you're watching. The volatility is there, the volume's there, the catalyst is the IPO. It's everything that you look for a trade on an even field, really, with all the other retail traders. So to me, there's nothing like it. And really, if I had just focused on IPO trading, first of all, I wouldn't have to trade so many days, and be watching the market all the time like I am. I'm actually like in the process of closing out most of my positions and moving just towards IPO trading, because it's been so lucrative. It's taken me from basically like mid 5 figures to mid 6 figures in 18 months. So,
wow.
Yeah. People say don't buy the IPO, it's the wrong time. Yes, that is true. If you're going to take a long position on a stock, the IPO is generally not going to be the lowest price of the first 6 months or the first year of a stock.
Right.
You've got lockup periods coming up. You've got market conditions that can be very hot during the IPO. You're paying a premium usually to whatever the actual IPO price is when it goes live. You're not getting it at the IPO price. You're getting it at the market price. So if don't confuse what I'm doing for buying things on the IPO thinking that that's going to be the lowest price ever. It's also usually not the highest price ever, especially within the first few days, which is where I'm making my money. I'm buying things like you looked at SEV the other week, or Bros Coffee. I mean, those were tremendous. And the one I showed you from last week, these are tremendous profit opportunities if you get into them and you recognize the demand. So
right.
These are in, out. They're not really, but you don't have to do so much technical reading. You don't have to read weeks or months of, you guys are so far beyond me when you're in your technical analysis of, going back to resistance level. I'm just kind of like, look, I'm buying something when I think it's, demand is going to pile up behind me. And I'm selling a lot of these within, 20, 30 minutes for, TIRX was my best win ever. It was a 3-hour halt, but I made $33,000 on a $16,000 trade in one day.
There you go.
Even that one from, we go back to that one that I showed you before. If you had traded for an hour on it and saw it coming and kept reading the level 2 data on the halts, you could have taken that, pretty comfortably from 40 to say 60 or even $80 and doubled your money in about an hour and a half of trading, and then walked away and had a great Thanksgiving. Anyway, thanks for your time. I can sense you got to go.
Of course. Yep. We're up against the clock here. Time for our next guest. But again, thank you for joining. As always, Matt Hammond from IPO Warriors. Please check out the site. Check them out on Twitter as well. Matt, we will see you next week.
Cool. Thanks, producer JB.
Of course. All right, y'all. That was Matt Hammond from IPO Warriors. We've got a stack show as always. So joining me in a minute will be Jake Wujastyk from TrendSpider. So he's got some charts we're going to look through. You can also throw some tickers in the chat. Maybe we'll have time to get to a few tickers from the chat. And then after Jake, we've got Chris Capre joining us at 1:30. So we'll be talking about some options with Chris. Maybe a little bit of option talk with Jake as well. So we've got two kind of technical guests back to back from 1 to 2. So if you're in the mood for some technicals, we've got you covered here on Benzinga. Before I bring Jake on, I got to make an ask to the chat. Please, everybody, smash that like. It just takes 2 seconds, and it is completely 100% free. Let me go ahead and play my cool little graphic. See, I mean, I get it, right? You're not going to do it for me. Spencer's not here today, so maybe this video doesn't deserve as many likes, but at least do it for our great editors. I mean, look at this little thing they put together. I got to play it again, how great it is. That took someone like 28 hours of straight work, so please smash the like for that, editor. All right, let us know in the chat what charts you're looking at. We're bringing Jake on right now. And then, yeah, we'll just talk some charts, hang out, have a good time. And yeah, without further ado, Jake Wujastyk. Jakey, how you doing?
What's up?
How was your Thanksgiving?
It was great. It was great. Got my son's first Thanksgiving in the books, so we had a great time. We spent it with friends rather than family. Family was in where I'm originally from in North Carolina, but yeah, we had a great time. How was yours?
It was good. I went back home to St. Louis, got to see family. The traveling was a little hectic with that. The airports were a little backed up and whatnot, but yeah, good time. Cannot complain. Good to be back in Detroit though.
Love it. Yeah, congrats on the big game.
The Michigan game?
Yeah. That was quite the game.
I'm kicking myself because my boss Jason Rasnick actually last minute invited me to the game. But I was back in St. Louis and my flights were on Sunday, not Saturday. So I actually looked at changing my flights and it would have cost me an extra $350. I was like, no, I'm just going to keep my original flights on Sunday. Didn't end up going. And now I'm like, yeah, if I could go back in time, I would have paid that $350 and came up and gone to that game. Cause that seemed like a kind of one of those once in a lifetime, sporting events to be at.
Oh yeah, that was epic. But speaking of epic, the market is just absolutely beautiful today. I'm loving it. So definitely wanted to go over some charts. And I will talk about options a little bit because there seems to be some fallacies in the market. I think some people are learning some valuable lessons today on options. But before we get started, let's just go over SPY and maybe a couple other names that really set the stage for a potential big bounce going into this week. One, last Friday was a very illiquid time to have a news event like this new variant come out. It was Friday. You were either hungover, you were either full of food that you could barely move. There was no participants in the market to really, be that demand to absorb any supply that was coming on the market from this variant news. And that's why you saw such just an absolute move down across the board. And it was interesting because it was one of those things where I just anytime I see the VIX up really over 25%, I mean, it was up 54% on Friday. That's always a bit of a red flag. Hey, this is pure emotion. This is straight up panic. And you can't sell on those types of days unless the thesis has changed. So one thing that I was really looking at on SPY, especially over the weekend, was the Williams percent range. If you guys are not using the Williams percent range on overextensions to the upside and the downside, you really need to. It's a great way to identify potential bottoms in the market when we do have sell-offs like Friday. So if you're looking at the SPY chart, you'll see these circles, green and yellow, or orange, whatever color that is to you. So essentially what I did was I looked at the Williams percent range 10. I'm not using a 14 because a Williams percent range 14 is very random, right? It's that if you're looking at the market in terms of trading days, 14 is not 2 weeks. 14 is 2 weeks because you have 5 trading days in a week times 2, that's 10, plus 4, that's 4 trading days. So you have 2 weeks and 4 trading days, a very random number. Even though it is the default for the indicator, it's not something I use really in any lower indicator oscillators that I look at, which most of the time it's just the percent range and the RSI sometimes. So what I did was I saw, every time the Williams percent range had a big dip, meaning that it really dropped below about -85, highlighted by these circles, you generally had a bounce this year. So anything that's highlighted in green, you had a bounce within 2 trading days, and that was a short-term bottom. Anytime you had a orange circle, that was a time where the market did actually continue lower and hit new lows over a 2 or 3 week period. So as you can see, we've got this yellow circle here. I circled it yellow because I had no idea what was going to happen today. I had a general idea last night when Bitcoin started to rip. I wasn't even looking at futures. I was looking at Bitcoin because crypto is your risk on high beta sentiment indicator for the equities markets. And so when you saw crypto ripping, that was a good indication that risk was back on in the market. We did have a little bit of a pullback this morning just to get all those shorts that thought they were clever and we're going to continue lower. And then we're just ripping right now. So this signal is showing a pretty strong move to the upside. I'm not fully convinced yet. I'll be very convinced if we can really close above this anchored VWAP from this last Monday's high candle here. That would be, the main thing I'm looking at. And the thing is, we did have that type of move the day before the crash. But remember, Friday was a very unique time for this type of news to come out. No liquidity in the market, and that's exactly why we had the move the way we did. So the main thing I'd be looking at really for a continuation move higher would be a close above this anchor VWAP from the high, which is right around 465. So keep that in mind. Let's say around 465.50 is what we want to see a close above. And, that's something that you could pair with this anchored VWAP setup, right? So for those that follow me and even follow the TrendSpire account, we love to use the anchored VWAP that was really brought to the market by Brian Shannon. And the way I like to use it and the way I was taught to use it was, one, you want to anchor a volume weighted average price from a low. This is the October low. This is the status quo change in the market. Then you want to anchor another volume weighted average price, meaning you want to start another volume weighted average price from the last candle that tested the original one. So the original one is this dark blue line. The handoff is this lighter blue line. And you'll see we moved down right to that handoff anchored VWAP on Friday with this percent range oversold. So you had kind of this double whammy here, and we're setting up pretty strong for a pretty big move if we did really have panic subside a little bit. It seems like we did. So that's SPY. That was why I was relatively confident going into this week. I added some positions on Friday. I did go pretty heavy cash, almost all cash and active positions on Monday. And then Wednesday, I did add some positions in FCell as well as First Solar. And then on Friday, I just added more because the thesis had not changed. It was, if we look back at other variants, did we continue down? No. There's just a lot of uncertainty about the vaccine. So SPY percent range signal pretty strong. I would definitely want to see a continuation and kind of a grind higher for this to be the true bottom, but you definitely have a nice thrust candle here so far. But another one that really kind of convinced me that we were likely at a short-term bottom was IWM. So IWM was a little tricky. If you look at IWM on the Williams percent range 10, it did give a few false signals. And that's the problem with oscillators, right? They can be oversold for a lot longer than you can stay solvent, especially if you're in options contracts or on leverage. But one thing that's really interesting is we moved down right to this year-to-date anchored VWAP. So that's essentially the volume weighted average price from the start of the year. On top of that, if you anchor the volume by price, which is just looking at the volume and where it's aggregating since a specific point in time, in this case, the July low here, we had a massive volume shelf. And if you follow me or the TrendSpire account, we talk about these volume shelves all the time. It's an area where there's a ton of volume holding at a specific level and aggregating. So we bounced right at this level perfectly. But then the other thing that I really don't talk a lot or touch on often at all is the relative volume indicator. And this is honestly something I only use on capitulation days. So a capitulation day meaning a huge move down with a huge spike in volume. And the relative volume indicator is essentially showing you, where are these huge spikes in volume where we have a much higher volume day than your 20-day average for volume. So you can see anytime we have this green shaded area, that is an area where you essentially have this capitulation volume. And you probably can't see it that well on the right-hand side. The y-axis is essentially these numbers here that represent the multiple. So for example, 2 means that the volume was twice as much as the 20-day moving average. Your 20-day moving average is essentially just this flat part here. So if you're trading right, for example, here, if you've got a day where you're literally right at this horizontal line, it means that you pretty much traded right at the 20-day volume moving average. So whenever you have these spikes, it's worth noting, and to the upside and the downside. So you can see we had a big volume spike in early November, and that marked a high. We have the volume spike on Friday. So far, that's marking at least a short-term low. So this is something I would highly recommend if you are a customer of TrendSpider and you haven't really seen me use this. Definitely use the relative volume indicator on big down days, especially on IWM. I have never seen this indicator not work for at least short-term bottoms when you've got this big of a spike in volume. It's just incredibly powerful, and it's something that I really helped me get some confidence going into today with some type of move to the upside. And then you really had Bitcoin. I mean, Bitcoin, Ethereum was probably the main one I was looking at. And if you look at the weekly chart, there have been some divergences on Bitcoin, and that's something I was definitely mentioning last week. But let's just go to that real quick so we can kind of clarify that. On Bitcoin, you had, I took it off. Damn it. Okay, well, we can touch on this then. Anyways, if you go to Bitcoin and you go to the 8, so let's turn on the 8. That means we're looking back essentially 2 months. That's why I'm using the Williams percent range on the weekly for 8. Same reason I use the Williams percent range 10 on the daily. I want to look back 2 weeks. The weekly, I want to look back 2 months. So notice here we had this divergence. So we had these higher highs forming, but we had the lower highs on the percent range. Well, we had already pretty much fulfilled that divergence, right? By the end of this weekend, the divergence had kind of played out. We were at this long-term level of support. And then on top of that, if you look back since the COVID low, you can see Bitcoin does not really have a lot of consistent weekly red weeks, meaning you closed lower than the week before. You have only had more than you've only had 2 instances where you closed more than 2 red weeks in a row. That was in the early stages during the COVID crash, as well as June of 2020. And then the rest of them, you have not had more than 2 weeks red in a row. So if you looked at these 2 weeks, you had red. This was the second red week that closed yesterday, right on this long-term support. So that was another thesis for me where I'm like, this divergence may be over. And as soon as we flipped above that 56K and just ripped, it was over. I was pretty confident risk was back on across the financial markets. But Ethereum was the same thing. If you look at the weekly chart, all you did here was simply test this previous resistance, test this longer term area of support, and then you started absolutely ripping so far this week. We'll see how it ends, but crypto is my main thing to look at over the weekends to get an idea of where the market could go on Monday. Now, Bitcoin did have some rough patches during Saturday and Sunday, but going into pretty much the last 2 hours before futures open, we started to rip. That was a pretty good sign futures were going to rip as well, and that's kind of what we got. For those that love statistics, go look up the correlation coefficient of SPY or QQQ in crypto. It's pretty high. That means they move in tandem, except crypto has a little bit of a higher beta. It means that's more sensitive to those moves. So hopefully that helped understand kind of my thought process on why the markets looked like we were probably going to get a pretty big move up on Monday.
So yeah, I mean, I like that too. I like looking at the chart of like Bitcoin compared to SPY because they're pretty correlated, but I feel like that takes away from, I guess, a lot of like crypto purists thesis that like Bitcoin is its own insular, monetary, product really, like, because if it's just going to follow the market, then why not be invested in the market?
I hate to be the bearer of bad news, but at least since the COVID bottom, markets and crypto, at least your Ethereums, your Bitcoins move in tandem. You do have a couple instances where they don't, because of that higher beta that Bitcoin and Ethereum have, meaning they move stronger than the markets, and you've got some of these wild liquidations and that type of thing. But they do move together, at least for now. That connection could disconnect, but for now, they do move very similar, and you should be watching crypto with the markets to get an idea of, this liquidity sentiment in the market.
So essentially you're saying if I, am hanging out tonight after futures close at 10 p.m. Eastern, and I see, oh my God, Ethereum and Bitcoin are up 5% each, that I can have a pretty good idea, okay, at least at the open tomorrow, if nothing changes, that we should see a pretty good day.
Yep.
Yeah, and I think that's like what I again, because like I love crypto. I love the space. I love trading it. I love investing in it. But sometimes, like, some of these people that are so into crypto that, like, essentially they're like all like, no, sell all your stocks and use that to buy crypto. It's like, all right, when COVID hit, crypto crashed too. It's not like you have this thing that's always going up no matter what.
Yeah, exactly. And it's really a bet against inflation. So, the more chance of inflation.
But even that, like a month ago, we saw the CPI number come out hotter than expected, and Bitcoin ended up down to 3% on the day.
Which makes sense, because the market's anticipating that they may raise rates because inflation is going up. So as long as inflation continues up without an interaction between the Fed, then you're going to see that long-term trend continue up.
So even Bitcoin will get hit on an announcement of Fed raising rates.
Oh, for sure. Yep.
Got it.
Yep. But yeah, so that's kind of the thesis. The relative volume indicator, huge one to check out on TrendSpider. So make sure to check that out if you do have an account. If you don't, we have the 7-day free trial. You can lock in the 60% off, which it is the last day for Black Friday. But the other thing that I want to go over is just some ideas going into maybe the rest of the week if we do have that strength. First one is FCell. This is one that I am looking at. I have a position, but I'm also not married to the position. And the only problem I have with this stock is you do have a lot of people in it. If everybody's in the position, who's going to be that next demand side of demand to bring it up to the next level? So for me, my stop is right around, probably around 850, that psychological level, a little below the previous lows. But you can see here, if you're using the Williams percent range 10, notice I changed it back to 10 because we're on the daily and I want to do a look back of two trading weeks. You've got these pennant setups that have formed multiple times over the last 2 or 3 months, and you've got the Williams percent range with a pretty strong signal here. So anytime the Williams percent range is oversold and you start to tick up, that's generally a pretty good signal for FCell. Now, we'll see how it plays out. The thing that I like about it is in an uptrend, at least on a, let's say, 2 to 3 month side of things. But then if you go to, let's say, the monthly chart, you're in a longer term primary uptrend as well. I mean, since the bottom here in 2019, 2018, we are hitting higher lows and hitting higher highs. So that is a longer term primary uptrend. And then you do have this kind of secondary trend that did come into play from around 2021 in February to August. And we seem to try to be, moving up again. And so that's why I like this. It is in an uptrend. A lot of your moving averages are starting to increase, something that Brian Shannon, who's a huge mentor to me, constantly pushes on. Anytime I get in a position, he's like, why are you in this if the moving average is decreasing? You do have the 5-day moving average decreasing. So if you go back to the daily, that is still decreasing here, which would be something, he'd be looking at and saying, hey, maybe not yet for me. But for me, I definitely do like the signal I'm seeing. If we can close, let's say, above $9 and probably near the highs today, I would see that this divergence is probably going to play out and be a stronger signal. But By no means am I married to this position. If I stop out, I stop out and move on. So that's kind of the thesis there. I do think renewable energy is going to continue to be a topic going into the new year, and we'll see what happens. And then the next one I want to go over is First Solar, another trade that I'm currently in, and this is one that kind of has an interesting thesis. So let me just take off the 5-day. And, the main thing for me here is you've got this handoff anchored VWAP. So that's very similar to what we just used on SPY. You can see that it's holding here. We hit a higher low on Friday. So even with the market turmoil, we did hit a higher low than what we put in on the 18th of November. If you look at the Williams percent range, we have this signal here. Anytime we've really been over, let me put this to 10, sorry. Anytime we've been oversold, you generally are forming at least a short-term bottom. So, I could quickly do this. This is another, if somebody's using TrendSpider and they want to quickly highlight a lower indicator while kind of clicking on the price, use this line with the circle around it. So when I do that, notice it's actually circling this point and the price action here while I'm just clicking. So here, same thing. So it's highlighting these areas for me as I'm highlighting them on the chart. So it just is a little, a little bit of an efficiency play where you can, see this on the chart and not have to circle these individually. So every time we've had these divergences, notice I was looking for the divergence on the 18th. We got it. We got the big move, and now we're starting to kind of form a bottom here. So on top of that, you've got the volume by price forming a nice shelf here. So for me, this one makes sense, to be in as well. But those are kind of the main two active trades I'm in. I don't really spread myself thin with this. I definitely only pay attention to a couple positions. It helps me stay focused on the position. How many times, talking to the crowd, how many times have you been in 10 positions where 5 of them are working really well, but the other 5 aren't? And that emotion from your losses on the other 5 are playing into your confidence in the 5 that you're winning on and making you essentially mess up. So I like to keep them, pretty concentrated. And so these are the 2 that I'm playing going into the rest of this week. Common shares. So this is kind of that fallacy I wanted to talk about. I know we're probably, we got about 5 minutes left.
Yep.
But this fallacy that I want to touch on is Friday, right? Friday, you had the VIX historically high, the 4th highest VIX since the inception in 1990.
Highest like 1-day gain, or it was actually at the highest?
4th highest. 4th biggest move up.
Got it.
So 54% move up in 1 day. That's insane. So what's interesting about this is anytime you want to buy the dip and you have the VIX that high, do not, and this is not financial advice, but you do not want to buy options because those options have such an implied volatility priced into them because the VIX is so high. On a day like today where you've got a strong green day, the VIX is tanking. So a lot of people may be wondering, why is my call option down even though, the stock's up 0.5 or 1%? It's because the VIX is crashing. The implied volatility is tanking in all of these positions, whether it was a call or a put. So, for me, I will never buy contracts on a day like Friday. I just added common stock because of that reason. So that's a little thing to always keep in mind. You don't want to play options, or at least if you want to be smart about it, you don't want to play options when the VIX is that elevated, because if you have a day like today where the VIX is just crashing, you're going to get destroyed even if the move is in the right direction the next day, if the VIX is crashing. So just something that I've learned personally, and hopefully helps others that haven't learned the lesson yet.
Yeah, no, that's great advice, because I'm sure a lot of people did just that. They saw a stock they liked that was down 5% on Friday, bought a call, and the stock's up today, but their calls are down. And they're sitting there like, what the heck? I picked the right way, whatever. I'm kicking myself because actually at the beginning of last week, I had some Moderna calls that I've sold on like Wednesday or maybe even Tuesday. And I sold them. I think I had like 2 contracts. I sold them each for like $500 for like $1,000. And if I would have held those contracts into Friday when Moderna was up 20% and the VIX skyrocketed, they would have been worth like 10 grand each. But how was I supposed to know there'd be a new COVID variant and Moderna would be up 20%?
Yeah. No, and that's the thing, even on a big move down day, if the VIX is up that much, you'll notice that your calls may be not down as much as you think because that implied volatility is being priced into the contract.
Right, exactly. All right, well, we've got a couple minutes left. If you've got anything else you want to look at, by all means. If not, this was some great information. I love the because that's been like something that I feel like I've been on for a while. The fact that like, hey, the cryptos, at least Bitcoin and Ethereum, like you said, are kind of moving with the markets. I've never really tried to look at them as kind of a de facto like futures,
Yeah, it's not perfect by any means, but it is a good proxy, at least for the most part, at least for now. That connection can always disconnect, but for now there is a pretty high correlation between the two. But yeah, we've got a couple minutes. If somebody wants to throw out a chart, the first one that throws out a chart in the
all right, let's do it. First one to throw out a chart gets it.
We'll go over it.
But
I have it right in front of me, so let's see who gets to it.
I think actually for like the COVID purist crowd, they should actually want that decorrelation from the market, because if your whole thesis is like, oh look, like this is going to be the money of the future, it's a hedge against everything. All right, Jake saw apps first, APPS.
Oh man, this thing's gotten crushed. Absolutely crushed. Well, the good news is we are at the COVID low anchored volume weighted average price. That means that what is the average price per share paid since the COVID low? You can see that we have bounced off this level before. Back in August, we bounced. Back in, right now we're at it, but back also in June, pretty much from April 2020 all the way to around June, we rode up it here. And you'll notice that I've got a percentage band here. That means that I've added a little flexibility around this. Essentially a percentage envelope is what, the technical term would be. But it's because notice here back in August, we also did not bounce right off the VWAP. We bounced off this zone. And so you want to look at past price history and see, okay, what is this zone that price has respected? There's not a exact percentage band that you want to use because it's based on the personality of the stock. So this one is this percentage band is a 10% band. So I'm adding another band 10% higher than the VWAP, and that's where we've bounced. If you go to an example like Snap on the monthly chart, you'll see here that I used a 15% band on this one. Because look back, what did we ride up? We rode right along this 15% band back in 2020, and we're right back at it again. So that's how I come up with these bands. There's not an exact science to it. You just have to look at the personality of the stock, look where price action has respected the band or that percentage envelope before, and that's how you can come up with your flexibility for each individual name. So hopefully that's helpful.
Got it. All right, everyone. Jake Wujastyk, check out TrendSpider. I saw someone in the chat saying they got on the Black Friday deal and they love it so far. I don't know if they've got a Cyber Monday deal going on so far right now or not, but
Black Friday is just, it's a continued into Monday. I guess you'd call it Cyber Monday deal, but 60% off any plan. Just go to trendspider.com and go to the pricing page. The 60% discount is already in the price. So you don't have to add a discount or anything. And if you sign up today, you still get the 7-day free trial. So if you sign up today, the sale ends tonight. You still get that 7-day free trial and you're locked in with the 60% off at the end of that 7 days. So give it a shot. That's what I'm always using. Every time I come on here, every Monday, we're using TrendSpider. And it's definitely the best tool I've ever used looking at the markets.
Beautiful. And if you do sign up, just make sure you tell them that AB sent you. Benzinga. I'm just kidding. But yeah, have fun. Check out the TrendSpider. Jake, thank you for coming on. Looking forward to next Monday having you on it. Until then, have a great week.
Hey, you too, man. See ya.
Peace.
Peace.
All right, y'all. That was Jake Wujastyk from TrendSpider. Bringing on Chris Capre since we ran a little overtime. We're just rocking and rolling, going one guest to the next guest. Chris, how you doing?
Very good. And yourself?
Pretty good. Cannot complain. Did you have a good holiday?
I did. It was a combination of super relaxing and hectic at the same time. So traditional family holidays.
Always the best. TMH says Ben looks bored. I don't know who Ben is, but I don't know. We'll figure it out. All right, Chris, you want to go ahead and pull up your screen? We'll knock out some charts, some stocks that you're looking at, seeing what's on your radar. We also might have to take, we might have some time to take up some tickers from the chat.
I think we will be able to. Okay, so first I want to talk about is Apple. Apple has broken above these, and you should be seeing the screen. Yeah. Okay. Sweet.
Yeah,
Apple broke above
right now.
What's that?
I said Apple's been having a good day. Well, last time I checked, it was up like 2.6%.
Yeah, it's looking decent. So broke above the prior all-time highs. Last week, we had kind of a liquidation going in stocks across the board, especially tech. Tech is kind of in a vulnerable place right now because it's in the kind of most negative gamma environment for options there is. And so for those of you who don't know, you're new to this show, negative gamma means that the market is net short options. And that statistically not only means that we have more volatility up and down, but it generally creates an environment where option dealers and market makers are taking liquidity away from the market, which exacerbates the volatility. And they're also trading with the market, meaning that if the market goes up, they're going to start buying that stock or futures. If the market goes down, they're going to sell. So that exacerbates the volatility. And tech really experienced that. But Apple has been holding its own. And when I see, stocks selling off broadly across the board, and yet there's a few that are holding strength, then that tells me that they have more inherent strength than some of those others that weren't able to hold their ground as the market sold off broadly. So I'm bullish on Apple. And what I'm thinking is that when I look at the order flow and the options order flows, I see that there's about 4.26 million calls prior to today in Apple, and you have about 3.4 million puts. So call heavy, and this is a stock that normally was much more balanced between calls and puts. Now it's gotten a little more call heavy as it's broken out of the all-time highs, and I think that is going to continue. The other thing I think about is with this whole new COVID Omicron variant, whether it's an issue or not, the bottom line is that people are going to be thinking it could be an issue, and that helps tech stocks, and it will help security stocks and cloud-based stocks. And I think Apple is just in one of those spaces right now that it's in a good shape, even though it doesn't really have, its own cybersecurity thing, or it doesn't have cloud-based thing other than Apple Cloud, which is not really a thing. They are in a good position and they're maintaining gains. So I feel like with Apple, I look at positioning. I feel like we're probably going to be in resistance this week. Right now, I don't see Apple really clearing 165 this week, but I also don't see it clearing, say, 150 to the downside. So I'm thinking about selling the cash secured puts on Apple, which would mean I would sell the puts at 150, either for this Friday or next Friday. I just don't see Apple getting down that far. If I do, I see it recovering. And so I will probably sell the cash secure puts. If you don't want to do that and you don't want to hold the margin, then my recommendation is wait till you get a little bit of a pullback in Apple. Wait till closer to 155. And the reason being why I like 155 a little bit better is as we get, you can see there's not a whole lot of order flow other than this prior all-time high. There's not a whole lot of order flow here. There's this, that's it. Where is the liquidity? Much more. Where is going to be the open interest in a much more solid way? Here. So I would say wait for dips to 153, down to 150 to get long calls. And then I would hold that for the December OPEX if you want to get long calls. If you just want to sell the premium, then make them to expiry this week. So that's the first one. Bullish on Apple. Happy to buy on dips, but don't want to be trading breakouts on Apple right now. Okay, second one, and then we'll get to some open Q&A. I see the chats kind of rolling here. Tesla has shown a pattern for months now, particularly during this little 50% rip in 4 weeks, is that traders rush in to buy calls early on Monday, and they'll hold those calls till Tuesday, Wednesday, try and capture a little bit of gains, and then close out as the theta starts to eat into this. There's a lot of short-term interest calls that just keep rolling over in Tesla. And I know this because when you look at the total options that are expiring on the Tesla stock, it's very high each week. You're talking 30, 20, 30, 40% of the options are rolling off each week. The only way that happens is if people are buying short-dated options and then exiting out, and then you keep getting the same thing. We are seeing a little bit of pullback or a little bit of tempering of that long call thing, but I feel like Tesla is in a decent shape. So we have earnings coming up not till January next year. So I feel like let's wait for a little bit of pullback on Tesla, and I would be happy to buy calls either if we get them today or tomorrow. I'll pull back into say 1082 down to 1060, low 1060s. I'd be happy to buy those calls, hold them for the end of the week. And I would just close the trade out if we have a 1 hour close below, say 1053. So you wouldn't have to hold them for the full loss. You wouldn't have to eat for all the theta decay. As soon as you get that, I would do that. And I would close them out for profit if we get to say 1130, 1140 on the week. So potential for, $60, $70, $80 to the upside in premium and not much to the downside. And so you can close them out for that. Third one I'm looking at is Microsoft. Microsoft, I think, benefits from the potential tech plays of looking for cybersecurity with their Azure. The Jedi contract in the US is getting renegotiated, and it's going to include several different cloud providers, with Microsoft being one of them. So I think Microsoft is in a good place. My one concern about Microsoft is this is also a high-flying stock, but this candle is kind of nasty. This candle is kind of nasty, and it's not necessarily ripping on the open right now. And we're not seeing, huge volume of shares. We're below the 10-day average. So traders aren't rushing into Microsoft to buy early on the week. And so I look at Microsoft and I say, okay, where would I want to get long Microsoft? So Microsoft has 1.3 million calls out there and about 1.3 million puts prior to today. And 15% of those options out there are not expiring till December OPEX. So I don't feel like there's a lot of short-term trading in Microsoft. So I wouldn't recommend per se day trading it or holding for a few days. I'd recommend waiting for a dip on Microsoft and I'm leaning towards this kind of probably 310 area between 305 and 310. When I see we start to get to 305, 310, dealers actually start to trade into the market. So if the market's selling off, they will start buying that because their rate of change on the gamma now puts them in a position where they will start unloading their short positions and will start getting long. So I like getting long between 305 and 310. If you wanted to, you could sell the cash secure puts expiring this Friday, or you could just wait for a little bit of a dip in that and get long the calls as we get close to 310. So that's pretty much it. Kind of a calm Monday right now. The markets are really digesting. The big thing, I think the biggest thing we have to pay attention to is VIX. And so VIX had a pretty scary last week. Some of that was low liquidity. The fact that VIX kind of went up and has been selling off aggressively means that the fear trade's not in right now. If there was fear in the markets, VIX would be rising, and that would be a sign that would probably increase put protection in the markets, mean traders are bidding long puts. We're not seeing that. We're seeing VIX sell off pretty consistently from 25 to 22, and a lot of that is probably a liquidation of a combination of the long volatility play that people did over the last few sessions and traders who bought puts, who got long puts as we ripped up to here with the markets pulling back. They're going to be closing out those puts, and that's going to be creating kind of a fuel and tailwind for the markets. So as long as VIX keeps rolling back, I could see VIX easily closing the gap. down to 2076, maybe even down to 1863. If it fills the gap this week, then you should see SPYs back at 470, and you should see SPX back at 4,700, 4,700 plus. If VIX starts to rip again, then you're going to start testing these lower levels in SPX and SPY. So for option traders, keep your eye on VIX. As long as this keeps selling off, it should provide a bullish tailwind for equities.
Got it. Yeah, we'll be watching the VIX. I was talking about that with Jake, our previous guest. The VIX move on Friday, I believe, was the biggest one-day gain in VIX maybe ever, but at least in the past, he said fourth biggest ever. So probably the biggest since we had that initial COVID. What was that? Beginning of March? Yeah. So yeah, I mean, if we see, that's what I'm curious about, because so say I have long calls on Tesla right now, and the VIX continues to drop tomorrow, but the markets are all good and Tesla's up. Is that going to be good for my calls or bad because the VIX is down, bringing down the implied volatility?
It'll be bullish. Anytime you have VIX coming down, it's generally bullish for equities. It's bullish for markets. VIX goes up when there's fear increasing in the markets. People are less willing to take on risk. And VIX also goes up when put protection starts getting bought. If people start buying put protection, meaning getting long puts, you'll see VIX spike. And pretty soon, those puts will start to get more and more expensive. Eventually, they'll get to a place of where those puts are too expensive, and then you kind of see it come down. But we have to take into account that this big spike happened during very low liquidity time. This is holiday, going into the holidays and things like that. So you're talking a situation where the liquidity was already pretty poor, and probably traders are saying, hey, we need to get a little bit more protection in there because there's less liquidity in the market, there's less support, there's less tailwind for equities. But with VIX selling off like this, it's generally a tailwind for equities. And, I told my members earlier today, I said, look, as long as SPX holds 4,600 throughout the week, should be bullish on the week, should be solid, should be supported. If it loses these lows here, then we could be in for a much bigger liquidation. Like this last week's selling could exacerbate. We're not seeing that to start the week. We're not seeing put prices go up in value. A lot of those puts that people got long puts last week are getting monetized. So dealers unwind their hedges and it creates a lift for the markets.
Got it. Makes sense to me. All right, let's see if we've got anything in the chat that we want to take a look at. We've got about 15 minutes. So just drop us some tickers in the chat. We will check them out. Probably better if it's kind of a bigger stock that might have some good option flow.
Sure. Somebody was asking about, Jay Rice was asking Microsoft cybersecurity. So they have the Azure cloud platform technology. And so that was, they were one of the winners of the Jedi contract, which is being redone. And it's including several cloud providers. So they're providing the cloud services for that. It's a huge multi-billion-dollar contract.
Yeah, that's been one of the biggest bull cases for Microsoft over the past couple of years, that Microsoft is one of the only companies out there that really has the infrastructure, I guess, to kind of compete with Amazon in the cloud space. For whatever reason, some of these other big tech companies, Apple, whoever, didn't really do the same investing in the cloud space that Microsoft did.
Yeah, and they have the architecture, they have the experience, they have the team to do that. And so, originally Amazon was going to get it, but then they lost it. But then, through changing of the contract, they're going to do multiple people. Bottom line is Microsoft is in there. I don't think that was the only bull case for Microsoft. Microsoft has had a lot of things going for it right now. And so, with that being said, I feel like Microsoft is it's in a good tech space right now. There certain tech companies that I think are going to do well, and then others that are not. And, with the kind of liquidation that we've seen in the small caps, small caps did not hold the line. Small caps, should have held between 227 and 233. It didn't hold. You had a break, and then you have 3 weeks of selling. So that tells you that, it tells me a couple things. One, that even though there was a load, just a huge amount of open interest and option volume there, It wasn't able to withstand this pullback. That tells me that IWMs and small caps are not as strong as they think. Apple's held the breakout. Many stocks have broken above their all-time highs and then kept going. We haven't seen that in IWMs. And my suspicion is, as we kind of go into this end of year rally early next year, I think people are going to want to move their holdings to companies that have a solid amount of robustness to them, profitability, good earnings, consistently. And you don't see that consistently in the small caps. So I feel like the market is saying, look, we want things going into next year to have our portfolio exposed to things that we feel like are stalwarts, not the high flyers that small caps can be. And so for me, I look at small caps and it's going to need to find liquidity lower here before it really finds support. If it really was a good breakout, it should have held it. Didn't hold it. Tells me it's not as strong as we think it is. So I think Microsoft benefits from that. They're more a legacy company that has shown consistent profitability.
Yep, agreed. All right, I'm seeing a comment in the chat. Someone saying PayPal's breaking out. It looks like PayPal, I mean, it's still red on the day, but it opened down about 2.5%. Now is down only about 0.5%. So it's made up about 2% throughout the day. I don't know I don't know what the options look like on this one, Chris.
Yeah, let's take a look at this. Take a look both at options before today, and then let's also take a look at today's numbers on PayPal. So, all right, so I got that. So prior to today, PayPal had about 908,000 calls and 700,000 puts. You had not a lot of short-dated stuff in PayPal. So there's no short-term expiries that have a lot of options expiring this week or anything like that. It's literally the next expiry with the most amount of options coming off is December 17th. That's a monthly. Today's stats, 154,000 options today. And you're talking a stock that was 1.6 million. So we're almost at that 10% threshold. From my experience, when a stock does 10% of the options of its total options in one day, that's a decent amount of float. And so that means that option traders are active. And so what do I see with PayPal? I still see resistance ahead, but as we get closer to 180, then things start to change in terms of that gamma rate of change, so to say. Let's pull up 180 on the weekly. And I mentioned this to my members a while back. Yeah, I said PayPal could go all the way down to 180. So we're pretty much there now. So let's look at this. What do we see? Big candles. Candles getting a little bit smaller. Smaller last week on a day that a lot of stocks sold off. And then this week, another small candle. So this could be that we're starting to get to that place where PayPal is saying, hey, and the people are starting to say, hey, it's kind of overdone at this point. Maybe this is a decent location. So I kind of like this 180 area from a flow standpoint. I think between 180 and 170, I think that's really the last Alamo for PayPal. If it loses that, then PayPal could find its way all the way down to 125. And it's just in a much bigger liquidation. This slowing down of the candles suggests that some of the impulsive selling is reducing a little bit. And it could either mean that there's a decent amount of profit taking happening, or it could mean we're coming into the bottom. I feel like I wouldn't want to entertain PayPal until we get to 180. And then I would consider it. I would probably have tight stops on it. So not there yet, but it's showing more resolve here at these levels.
Got it. All right. We've got PayPal's take. Let's see what else we've got in the chat. Yeah, anytime you see a stock that's in this big of a downtrend, you'll see people out there saying oh, this is the bottom, whatever, and try to bottom fish that. Not me. I'm like you, Chris. I'd rather just wait till we see that trend back on the we see that uptrend.
Or a transition, at least some transitions in the price action. Because, the bottom line is you can bottom fish all you want, but very few people have made consistent money bottom fishing or catching falling knives. It's far better to let the order flow show itself in the price action And if traders really start coming into the market, then we don't need to bottom fish. Let the transition show itself in the price action. That will communicate to us there is some buying, there's some absorption going on, maybe hedging impacts are coming in, and then we can look to get long. But otherwise, no. One session is rarely ever a bottom. It's decent. As I look at this on the 5-minute chart, it's decent, but it's still corrective. There is steady buying because we have more blue candles than red. That's it. That's helpful. But if you think about it, it's been 20 minutes dropping from 190 to 181 or 182. And then it spent the last 3 hours bouncing half of that. So it's not dead cattish, and it's above the VWAP, which is good, but it's not out of the woods yet. I would say this is, showing some transition, but not enough to say this is the bottom.
Got it. I see Chip Greenside's asking about CPRI. He said it's a high-end retail play.
Capre Holdings.
Capre, yeah. I didn't even realize that. Man, I don't know if
slightly different spelling. This was this is like the traditional spelling of the Italian Capre, CAPRA, like the island. So, all right, so let's take a look at that. Capre Holdings. Just wants to look at Capre. All right, let's take a look at it.
I thought the space has been, like, high-end retail in general, I thought has been pretty strong. I mean, if you look at like Dillard's or some of these other like kind of higher name retail stores have just been on a tear since COVID.
They have. There's actually a Dillard's like super close to me here. So, all right. So here's what I'm saying. CPRA is not a heavy option stock. And I say that because the total options before today is less than 100,000. So you're talking 27,000 calls prior to today and 25,000 puts. That's not much. That tells me it's kind of it's a lower option stock. So you always have to be a little bit more cautious anytime you trade a stock with less than 100,000 options, because the spreads are going to be a little bit wider and liquidity will be a little bit an issue. You're talking over a lot of strikes. You may not get filled, maybe harder to get out of some of these options. So just a word of caution anytime you trade a stock with below 100,000 options out there. This is, 52,000 options. I'm not seeing a whole lot of buying on the day, 1,500 options, and I'm not seeing a whole lot of volume. It's below the 10-day average. And so what's this lad? He just wants analysis on it. 10% of these options expire in December 17th. So, roughly another 5,000. That's not that many. I really would rather be short than long at this point. Where would I consider a potential long? I really wouldn't want to be long until we get to probably close to 50. Structure-wise, this isn't bad to have one breakout week, but 4 weeks of selling like this, it is corrective and it is kind of pulling into this zone. If this zone doesn't hold, then it's going back to down this area. That's what I'm seeing. And so because it's low volume stock on the day and low volume in options, that means that we don't have a lot of institutions buying this. It's not a lot of retail rushing to it right now. Tells me this is not necessarily time to buy and expect it to be a mover. Wait a little bit, see as it probes into here, see if it gets more interest. If volume starts to pick up, then maybe I'll hold the line there. Otherwise, wait for a little bit further pullback. So that's what I'm seeing on that one.
Got it. All right, I'm seeing a good one from ETC. He wants Affirm, ticker AFRM. I'm sure Affirm's options are pretty liquid.
More robust. So Affirm has had a very interesting
existence
kind of series of events. Yeah, it's had a very interesting run and then a very interesting rollback since then. So Affirm 70-80% gain in a period of 2-3 months. It's insane. Absolutely insane. All right. So Affirm prior to today, 278,000 options. On the call side, 114,000 puts. Of that, about 16% is rolling off for the December OPEX. So there's not a lot of short dated interest that will influence the price right now. Today, though, this is a stock that did roughly 400,000 options prior to today. It's done 52,000 options on the day. That's robust. That's, more than 10%. It's It's probably like 12.5% on the day. And of that, roughly 2.25 out of every 3 options were calls. So there is some buying on it right now. Looking at the volume, and I'm not seeing a lot of share interest on this. I look at this and I feel like I would rather wait for a move into 150 or this weekly VWAP and sell it. I think 150 acts as resistance. I don't see support coming in a firm until 120s, which is where we had this little spike here. So yeah, like the liquidity gets better and better and the open interest gets better and better in this area.
So you're not a buyer of a firm right now. You want to see it get back down to that $120 level?
Yeah, I want to see it get down to this area. You know, last week's spike lows towards that. That's where a lot more of the open interest is sitting right now. And that's where a lot more of the, like the dealers aren't trading. You know, right now as the market goes down, dealers are kind of, you know, selling to neutral. But as we start to get into this area, you know, that selling starts to abate and they start kind of trading into the market. So if the market goes down, they start buying her.
Does this setup to you, like, would that trigger you to make a short trade on it? Or would you rather just wait till it gets down that level, then make a long trade?
We get a weak pullback in here, I'd be happy to short it. Happy to. I'm leaning more towards short than long right now. Based on the current structure, based on the gamma profile, based upon the positioning and open interest. I think whoever, you know, if these are a lot of short dated options, I think people are gonna, you know, probably experience some pain on that. So yeah, I'm not seeing it. And I'm not seeing, you know, the numbers on the stock side. You're about half of the average 10-day volume. If a stock is being bought up aggressively, that number is usually well into the, you know, same or higher than the 10-day average by now. If it's below, it means there's not a lot of eyes on it. So that's what I'm looking at right now. And I'm just not seeing the interest.
Got it. All right, y'all. Well, Chris Capre from Second Skies Trading, go check him out. Go check out the website, should be in the description, as well as his Twitter. I'll drop that in the chat. Chris Capre joins us every Monday at 1:30 to run through the technicals of some charts, look at the option flow. So we always get some good information out of Chris. You know, Chris, again, hope you had a great holiday and have a great rest of your week.
You do the same. I'll see you next week.
All righty. All right, y'all. Again, that was Chris Capre, Second Skies Trading. Go check him out. I don't know why. I forget why I was looking at Dutch Press. Oh, that was back when we had Matt Hammond on. We were talking about IPOs. Let's just do one last quick check in on the market. SPY up 1.5% right now. QQQ. Oh, wow. QQQ outpacing the SPY by a good amount. 2 and about 0.3% up on QQQ. Dow, the laggard of the day, out of the major indices, up only nearly a full percent. So, you know, good day out there for tech. Good day out there for the Qs. Go ahead and smash that like if you have not already. We'll get Spencer back tomorrow, so it's not just me on the stream today. Yeah, I mean, Matty, shout out Matty Ice. Matty Ice, we got to get you back on. We'll talk some more spreads soon. Like I said, smash the like, subscribe if you have not already. Coming up right now, we've got Moon or Bust. We're going to be talking about maybe what Jack Dorsey's up to, what he's going to be up to as he's leaving Twitter, maybe something in the crypto space. I've heard, you know, according to Logan, they've got a genius interview coming on too. So if you're looking for a little bit more genius in your life, stay tuned. Again, thank you, Antonio. Smash that like. That'll be a wrap for us. This stream will automatically redirect you to Moon or Bust, so do not go anywhere.